Well, for more on what's driving markets and sentiment, perhaps particularly globally, I'm joined by Jack Lowenstein, Co-Chief Investment Officer at Morphic Asset Management. Jack, thanks very much for joining us.
Good day, Helen.
Now, let's talk housing markets, but in 3 different countries, Australia, Canada and Japan, because I know you've been doing analysis of where each of their property markets are at in terms of perhaps how exposed their banks are or are not.
Yeah, exactly. I think we've been really focused on Canada as our starting point, where, as you may be aware, some of the fringe banks are starting to get into serious trouble.
Yeah.
And the rating agencies have downgraded all the 6 major banks. And what really strikes us is that in Canada, house prices aren't even falling yet.
Right, so you're saying the banks are being sort of re-rated, downgraded, but the house prices aren't falling, but they have been rising very steadily, haven't they?
Correct, they've been rising steadily, much like Australia, but the difference we see is that Australian banks seem to be bulletproof on this point, and yet house prices in Sydney are already clearly peaking and starting to fall. All
right, so you're saying perhaps the Australian banks are either they're not being re-rated and they should be, or that they're due for one?
Yeah, our view is that people in Australia should be paying close attention to what's happening in Canada. It's probably the place in the world that's most like us amongst major countries. And the difference, I think, Helen, is that in Canada you've got these fringe banks that take the first hit, if you like. We haven't really got those in Australia, so we could be sort of missing our canary in the coal mine, if you like.
All right, so what should people be looking at if you're saying look at Canada?
Well, I think they should be looking at how the fringe banks are basically going bust, how the rating agencies are looking at the Canadian banks, and ask themselves when that caravan is going to move on to looking at the Australian banks, and calling a halt to what's going on here, because we see lots of government action that's very negative for the local property market that hasn't really fed into the system yet, but could really start to hurt. Things like stamp duty rises in many states, the crackdown on developers selling property to overseas buyers, and
restrictions on how much new development, apartment developments can be sold to foreigners, those sorts of things.
That's exactly it, yes, which we don't think it was in the plans of the developers when they acquired their land. I mean, a lot of the big land banks that have been acquired in recent times have been by Chinese developers who clearly plan to sell to Chinese buyers. And I think those plans are going to be on hold.
Yeah, okay, so those sorts of curbs are still to be felt by our market. But just tell us a bit more about this view of, you did say they were fringe banks in Canada. Now this, what is it, Home Capital Group, they have about 7% of the home mortgage market. So that is different to our major banks. Why are you, in a sense, equating the two?
I'm not equating them. What I'm saying is that in Australia we don't have that buffer of perhaps weaker practice lenders. We do have brokers who prepare loans for banks, and in Canada the problem is the brokers basically lied on behalf of the borrowers. I suspect there's a little bit of that going on in Australia, but the thing is that the banks are obviously big enough to absorb some losses, but it won't be without pain for the shareholders.
No, all right. So are you saying, did I get an answer on that? Are Australian banks due for some credit rating downgrades based on housing?
I would be surprised if it doesn't happen within the next year.
Okay. Now, what about Tokyo? Because, you know, once upon a time, Tokyo was, well, not once upon a time, relatively recently, Tokyo was considered a very expensive property market. You know, there are concerns about a bubble there too, aren't there?
Yeah, well, I mean, you're not joking, but 35 years ago, I think Japan was widely regarded as the most expensive property market in the world. Today, you can buy a 2-bedroom apartment in central Tokyo for roughly half the price of a suburban apartment in Sydney. And the difference is you can borrow at about 1% and you can rent it out for a rental yield of about 3 to 4%. So wow, it's really attractive. But Japanese investors are concerned that there may be a bubble.
Oh, all right, so sorry, on that score, can foreigners invest in Japanese property?
It's quite hard. The Japanese banks don't really like to lend to foreigners. But I've got quite a few friends who've got Japanese wives or husbands, and they're busy buying a property as fast as they can.
All right, Jack Lowenstein from Morphic Asset Management. Always good to talk to you, Jack. Thank you.
Great to be here. Bye-bye.